all, welcome back to our sessions. Today we are going to discuss the remaining questions of Section 5, Chapter 5 Education Credits. So let's see the first one. The lifetime learning credit is different than the American Opportunity Credit. However, they do share some of the same requirements. Which of the following requirement pertains to both education credits? A. Expenses related to non-credit courses are allowed as qualified education expenses. B. To be eligible for either of the education credits, taxpayer must use any filing status other than married filing separately. C. There is no limit to the number of years the credits can be claimed. D. The credits are available for only the first 4 years of post-secondary education. Let's see what is the answer. The answer is B. Let's see why it is B. So here statement B is the requirement that pertains to both the lifetime learning credit and the American Opportunity Credit. So to claim either of these credits, taxpayer cannot use the married filing separately status. They must use another filing status such as single, HOH, qualifying child with dependent child, or married filing jointly except MFS. So let's go to the next question. Which of the following is the same for both the American Opportunity Credit and the Lifetime Learning Credit? A. The maximum amount of credit. B. Application of felony, drug, convictions rules. Option C. Number of years the credit is available to student. Option D. The amount of credit is determined by the amount a taxpayer pays for qualified tuition and related expenses for students. Let's see what is the answer. The answer is D. So let's see why the other three options are wrong. So the first one, maximum amount of credit. The maximum amount of credit differs between American Opportunity Credit and Lifetime Learning Credit. So the American Opportunity Credit has a maximum credit of 2,500, whereas Lifetime Credit has 2,000. And option B, application of felony drug conviction rule. So here this rule is specifically related to American Opportunity Credit. A felony drug conviction can make a student ineligible for the American Opportunity Credit, but it does not affect the eligibility for lifetime learning credit. So option B is wrong. Option C, number of years that credit is available to student. So the number of years the credit is available to student differs between American Opportunity Credit and Lifetime Learning Credit. So here the American Opportunity Credit is available for the first 4 years of post-secondary education, whereas Lifetime Learning Credit can be claimed for an unlimited number of years. So option C is wrong. Option D, the requirement that the amount of credit is determined by the amount a taxpayer pays for qualified tuition and related expenses for student is same for both American Opportunity Credit and Lifetime Learning Credit. So in both cases, the credit is based on the percentage of the qualified expenses paid. Let's go to the next question. Which of the following statement is incorrect regarding education tax credit? Option A, courses to acquire or to improve job skills are allowable for the lifetime learning credit. Option B, 40% of the American Opportunity Credit may be refundable. Option C, the first 4 years of post-secondary education qualifies for the American Opportunity Credit. D, student must be enrolled full-time in a degree program in order to claim the American Opportunity Credit. Let's see what is the answer. The answer is D. So here the statement the student must be enrolled full-time in a degree program in order to claim the American Opportunity Credit is wrong, because to claim the American Opportunity Credit, the student must be enrolled at least half time in a program leading to a degree or other recognized education credentials. So there is no requirement for the student to be enrolled full time. So the credit can be claimed for both part-time and full-time student as long as they meet the other eligibility criteria. Let's go to the next question. Ganesh paid 3,000 for his daughter's tuition last year. What is the maximum potential amount of his American Opportunity Credit for her expenses? Option A, 2,250. Option B, 2,000. Option C, 750. Option D, 2,500. Let's see what is the answer. The answer is A, 2,250. Let's see why it is A. In this case, Ganesh paid 3,000 for his daughter's tuition. Since the maximum credit is limited to 2,500 per student, the credit amount will be based on the maximum allowed expenses. So the maximum potential amount of his American Opportunity Credit would be 100% of 2,000, which is first first 2,000 is 100% and the next 2,000 is 25%. So first 2,000 is 2,000 and the other 1,000 into 25% is equals to 250. So 2,000 plus 250 equals to 2,250. Let's go to the next question. Samir and Sneha are married and file a joint tax return. For 2022, they claim their daughter as a dependent on their tax return. The modified AGI is 170,000. The daughter is in her second year of studies at the local university. They paid 4,400 in 2022 for her tuition cost. Sneha and Samir are allowed an American Opportunity Credit of A, 4,400, B, 1,250, C, 2,500, D, 1,750. Let's see what is the answer. So the answer is B. Let's see why it is B. So in this case, Samir and Sneha paid 4,400 in tuition cost for their daughter. So the maximum credit allowed is based on first 4,000 of qualified education expenses. So to calculate the credit, first 2,000 is 100%, next 2,000 is 25%, and the remaining 400 is ignored. So total qualified education expenses is 2,500. Here, the credit is subject to phase out based on the taxpayer's modified AGI. In 2022, the phase out range for married filing jointly is between 160,000 and 180,000. So, here to calculate the reduced credit amount, we need to deduct the highest phase out minus the taxpayer's AGI. So, if we deduct 180,000 minus 170,000, the amount will be 10,000. And lower phase out is we need to deduct, so base is we need to deduct 180,000 minus 160,000. The base will be 20,000. So 10,000 by 20,000 into 2,500. The reduced credit amount will be 1,250. So here Samir and Sneha are allowed an American Opportunity Credit of 1,250 based on their modified AGI of 170,000 and tuition cost of 4,400. Let's go to the next question. Bobby is a full-time student and is a fifth year college senior. Assuming all other requirements are met, Bobby is eligible for which education credit? A, lifetime learning credit. B, both American Opportunity Credit and lifetime learning credit. C, neither American Opportunity Credit nor lifetime learning credit. D, American Opportunity Credit. Let's see what is the answer. The answer is lifetime learning credit. Let's see why it is A. So in this scenario, Bobby is a full-time student and a fifth year college senior. So here, based on this information, he is no longer eligible for the American Opportunity Credit because it is available only for the first 4 years of post-secondary education. However, Bobby can still be eligible for the lifetime learning credit because the lifetime learning credit is available for students who are enrolled in at least one course at an eligible education institution. It is not limited to a specific number of years of post-secondary education. So, Bobby can still claim the lifetime learning credit in his fifth year. Let's go to the next question. Samson has a bachelor's degree in nursing and he works full-time at an assisted living facility. He wants to obtain a master's degree in speech therapy. Samson takes one evening course each quarter towards a master's degree in speech therapy, assuming all other requirements are met, which education credit is appropriate for him? A. Lifetime learning credit. B. Neither American opportunity credit nor lifetime learning credit. C. American opportunity credit. D. Both American opportunity credit and lifetime learning credit. Let's see what is the answer. The answer is A. Let's see why it is A. So in this scenario, Samson already has a bachelor's degree and is working full time. He is taking evening courses towards a master degree in speech therapy. Based on this information, he would not be eligible for the American opportunity credit as it is available only for the first 4 years of post-secondary education. However, Samson can be eligible for the lifetime learning credit because the lifetime learning credit is available for students who are enrolled in at least one course at an eligible education institution, regardless of number of years of post-secondary education they have already completed. So, Samson's part-time study towards a master's degree in speech therapy would qualify for lifetime learning credit. So, lifetime learning credit is appropriate for Samson in this situation. Let's go to the next question. Chari is an older student who has gone back to college half-time after serving 18 months in prison for felony drug possession. If he meets all of the other requirements, which education credit is appropriate for him? A. American opportunity credit. B. Neither American opportunity credit nor lifetime learning credit. C. Both American opportunity credit and lifetime learning credit. D. Lifetime learning credit. Let's see what is the answer. The answer is D. Lifetime learning credit. Let's see why it is D. So in this scenario, Chari is an older student who has gone back to college half-time after serving 18 months in prison for felony drug possession. Based on this information, Chari would not be eligible for American opportunity credit. But still, Chari can be eligible for lifetime learning credit because it is available for students who are enrolled in at least one course at an eligible education institution, regardless of their criminal history or the number of years of post-secondary education they have completed. So, Chari's half-time enrollment in college would qualify him for lifetime learning credit. Let's go to the next question. Sanjay and Jasmine are married and file a joint tax return. For the current year, their modified AGI is 76,000, which is below the phase-out range for the married filing jointly filing status. Sanjay is attending the community college in Pennsylvania to earn credits to attain an associate degree in accounting. He is taking one course per semester. In September, Sanjay paid 4,000 for his fall semester. What amount may Sanjay and Jasmine claim as lifetime learning credit? Option A 0, option B 1800, option C 2000, option D 800. Let's see what is the answer. The answer is D. Let's see why it is D. In this case, Sanjay paid 4,000 for his fall semester at the community college. The maximum credit is based on the first 10,000 of the qualified education expenses. So here to calculate the credit amount, 20% into 4,000, which is qualified education expenses. So the amount is 800. So Sanjay and Jasmine is eligible to claim 800 as lifetime learning credit for Sanjay's fall semester expenses. Let's go to the next question. Bhaskar and Tanuja are married and file a joint tax return. For the year, their Maggie is 75,000. Sanjay is attending a college and eligible education institution to earn credits towards a degree in nursing. She already has a bachelor's degree in history and wants to become a nurse. In August, Tanuja paid 5,000 of qualified education expenses for her fall semester. Bhaskar and Tanuja can claim A 0 because she already has a degree, B 2,500 lifetime learning credit, C 1,000 lifetime learning credit, D 2,000 lifetime learning credit. Let's see what is the answer. The answer is C 1,000 lifetime learning credit. So here in this case, Tanuja is attending a college to earn credits towards a degree in nursing. Although she already has a bachelor degree in history, she is pursuing a different field of study. Based on this information, Tanuja paid 5,000 of qualified education expenses for her fall semester. The maximum credit is based on first 10,000 of qualified education expenses because she is eligible for lifetime learning credit. So 20% into 5,000 equals 1,000. Bhaskar and Tanuja can claim a 1,000 lifetime learning credit for Tanuja's qualified education expenses for her fall semester. Let's go to the next question. Two taxpayers married on November 30 that same year. The husband enrolled in an accredited college to further his career and subsequently received a Form 1098T tuition statement. The wife was employed with an income of 45,000 and paid for the husband's education expenses. Based on their circumstances, what is the correct method to report the education credit? Option A, taxpayer must file a joint return to claim an education credit. Option B, based on wife's AGI, did not qualify to claim an education credit. C, wife should report non-qualified education expenses on Form 8863 education credit. Option D, husband is ineligible to claim an education credit because the wife paid his education expenses. Let's see what is the answer. The answer is A. So here in this situation, taxpayer are married and husband enrolled in college to further his career. To claim an education credit such as American Opportunity Credit or Lifetime Learning Credit, taxpayer must generally file a joint tax return. So when married taxpayer are eligible for an education credit, they must file a joint return to claim the credit. This is true even if only one spouse incurred the education expenses or received Form 1098. So the correct method is to report the education credit in this scenario is that taxpayer must file a joint return to claim the education credit. Let's go to the next question. Disha is age 30 and a graduate student. She is married but uses the married filing separately status. She and her husband keep all their finance separate and she pays all her own tuition costs. Her AGA is 40,000 on her separate return. In 2022, she pays 5,000 in tuition and fees to qualifying education institution. What education credit deduction can she claim on her separate tax return? Option A, she can deduct her tuition as an adjustments to income. Option B, she is not eligible for education credit. Option C, the American Opportunity Tax Credit. Option D, Lifetime Learning Credit. Let's see what is the answer. B, she is not eligible for education credit. So in this scenario, Disha is married but chooses to use the married filing separately status. Here, for both American Opportunity Credit and Lifetime Learning Credit, taxpayer must generally use the married filing jointly or qualifying widower with a dependent child filing status to be eligible. Here, because of her chosen filing status, which is married filing separately, she is not eligible for either the American Opportunity Credit or Lifetime Learning Credit. Let's go to the next question. Kumari, 25, decides to go to college full time to get 4-year degree. This is her first time attending college. She meets the requirement for the American Opportunity Tax Credit or Lifetime Learning Credit. Which of the following expenses qualifies as education expenses for the purpose of both education credits? Option A, college tuition. Option B, on-campus room and board. Option C, health insurance. Option D, required student health fees. Let's see what is the answer. The answer is college fees. Let's see why the other three options are wrong. So for option B, on-campus room and board, it is not qualify as eligible education expenses because these expenses are generally considered personal living expenses and are not directly related to the education itself. Option C, health insurance expenses are also not considered eligible education expenses for the purpose of education credit. Health insurance is seen as separate expenses and it is unrelated to education institution. And D, required student health fees are also not considered eligible education expenses because it is not directly related to the student's enrollment or attendance at an educational institution. So D wrong. Option A is the right one because college fees qualifies as an education expenses for both the American Opportunity Tax Credit and Lifetime Learning Credit. So with this, we have finished chapter 5 MCQs.